Okay, so welcome back to another Welcome to Dystopia episode. This is episode number 44. I'm going to be doing this as a live stream today, and unfortunately Phil Kennedy cannot join me. He is traveling for his day job. And Phil and I had been planning on doing this episode for over 2 months, and there was trouble coordinating our schedule, so I wanted to get this information out to you guys. Yesterday was my birthday dinner. Yesterday was my birthday, and today I'm having a birthday dinner in a couple hours, so gonna keep this hopefully around an hour for the show. So before I get into the main topics for today's Welcome to Dystopia episode, just want to give you guys the stupid disclaimer, and there's not going to be any crazy jokes in there, because we had one person who liked the little comedy skit I was doing about the mean guy who lied and got the investigators to show up suits and badges to show up, but most of the people were not happy with what the little skit I was doing, the comedy skit I was doing about him, the riff. So we'll keep it simple for the stupid disclaimer. This is for information and educational purposes only. I'm not a financial advisor. Do your own individual due diligence. If I mention a company or an industry or any talks about that, if I talk about a stupid investment newsletter writer who wrote an article about how McDonald's is a growth stock, and I lay out the case for why it's not a growth stock, and they're just doing 100% financial engineering on their balance sheet to grow earnings per share while their revenues crater, and they've loaded debt onto their balance sheet for years now. That is not financial advice. That is just my opinion. And McDonald's, for the record, is not a growth stock. They are growing earnings per share, but just like their Frankenfood, they are doing it in a very grotesque way. Okay, so let's get into the topics that I wanted to cover for you guys. You can see, instead of an economic cartoon, I put here that life is not fair, get used to it, and that is a general theme now. And it's not just the Federal Reserve doing it, it's not just the U.S. government doing it, it's not just the U.S. Treasury Department doing it, it's all the major central banks, even emerging market ones, as you'll hear in the show. And it's also, governments. So it's governments and central banks coordinating to try and change the rules. They are moving the goalposts. Sometimes we find out about it pretty quickly. Sometimes we find out about it in real time. Sometimes we don't find out about it till much, much later, as we found out with the Ron Paul one-time partial audit of the Federal Reserve that he got both Republicans and Democrats to agree to. And sometimes we don't find out about it at all, if not years later. And so one of the main things about this show, and the title for Welcome to Dystopia episode 44, is that, governments and central banks are scrambling to change the rules constantly. And, now we're starting to see them brazenly talk about this in public. And I'm not sure if you guys saw this, but my buddy James, who has flown into the DC area for his day job from Texas, so shout out to James, and he sent me this a while ago. And GATA, Gold Antitrust Action Committee, had this article up. And this is so brazen, guys, that the Bank of International Settlements posted the whole damn speech on their website. So this is, let me get the guy's name up, and the link to this will be after the video is done, the live stream is done. I'll have the link up to this exact speech so you can take a look. Okay, so the guy's name, remarks by Simon M. Potter, Executive Vice President of the Markets Group of the Federal Reserve Bank of New York. And he gave a speech at the end of December of 2017 for the commemoration of the centennial of the Federal Reserve's U.S. dollar account services to the global official sector. And basically, if you want to read the speech, there's a lot of interesting stuff in there, and I'm surprised it's still on their website, given how tight-lipped sometimes that they can be. But the stuff that's disclosed in there, it's admitting in the speech. GATA has a link to this as well, so you can see this as well. But the entire speech is on the Bank of International Settlements website, the whole damn thing. And it is talking about how basically every time there's a major natural disaster or there's a major financial crisis, how governments and central banks are willing to screw over their taxpayers, willing to screw over their savers, even screw over their bondholders, which I'll talk about a little bit later too, how basically over 100 years of bankruptcy law that had never been violated was also violated by President Obama in the General Motors bankruptcy. So that shows you that the people in power are willing to screw over anyone and everyone to change the rules and help out their friends. And with the elites, with this back to the speech by Simon Potter, he actually admitted in the speech that the Federal Reserve and other central banks coordinated for the Fukushima. There was currency swaps. He admitted about the 2008 financial crisis, and he talked about other specific events where central banks have changed the rules and where people maybe were betting on certain market outcomes to happen, they didn't happen, and people are scratching their heads. And so this brings me, if you're a Real Vision TV subscriber, there is a superb interview with Stanley Druckenmiller from last week. Now, for those of you who are not familiar with Druckenmiller, he has probably one of the best long-term track records in finance. I believe he compounded 30% annual returns for decades. And, if you don't have a chance to, there's free articles that summarize what Druckenmiller said in the interview, but I went back and listened to about half the interview twice. So I didn't watch the full interview twice, but I watched certain parts of it. And Druckenmiller admitted, and this is one of the smartest men that's worked in finance, best track records, he admitted that he's having problems figuring out what's going on in currency markets, what's going on in the bond markets, because Druckenmiller said that the majority of his winning trades where he made the most of his money, and the guy's a billionaire, where he made the most of his money was on leverage trades in currencies and bonds. And he said, he's been putting on trades for a while. He's still trading. I don't know if he's doing it quite as much as he used to. He's doing a family office now. He's not professionally managing money. But he said that, he can't fully figure things out. And that's because the theme of the show. That's, in my opinion, based on my research, interviewing the experts or listening to them speak in other interviews, is that the rules are changing. And the people who are smart and usually get things right more than they're wrong in investing and trading, they're not getting their track record. They're not hitting those numbers with the investments or trades because the people in power, these governments, these central banks, are changing the rules so frequently. And a few years ago, I came up with the 3 most important rules of investing in this new normal. And, the number one rule, and they're in the information section of, I'm not going to repeat all of them right now. They're in the information section of this video after the live stream show is over. You can go and read them there for yourself. Is that politician, and you will not hear about this on the mainstream media. Jim Cramer's not going to talk about this. Most of the people in the alternative media won't even talk about this because they just want to talk about petro yuan, pumping gold and silver, pumping cryptos. They have not studied financial history. They have not studied what the people in power will do in past financial panics, whether it's, the Great Depression in 1929 or so many of the others throughout history. And that's politicians and governments can and will change the rules anytime they want, perhaps on a daily basis, moving the goalposts, retroactive rules, ex post facto, grandfather clauses stuff, moving targets, and there's absolutely nothing fair about this. Okay? There's nothing fair about this. But this is the new normal that we are in. We're in the new normal where governments and central banks will change the rules probably frequently, probably more than you even think. There may already be coordinations to talk about what they're going to do after the next crisis. So I've interviewed Dr. Mark Faber on many different times over the years, and he talked about how he thinks central banks, the major ones, are coordinating every month or so. And I've talked with Nomi Prinz and others, and she thinks they're doing it on a daily basis. Okay, let me take a swig of water, and then I'll check my notes, and we'll keep on track. This is why I don't like the live show so much, because can't edit out the parts where I'm taking a break here with the swig of water. I had some technical problems for the last couple weeks. There was a microphone cord that was not working. It was an old microphone cord, about 3 years old, that came with my microphone. And apparently I thought it was Windows that was giving me a problem, but it was just a stupid microphone cord. I know some of you guys don't want to hear that because you're going to say, oh, you're a whiner, complainer all the time. Okay, so I'll move on to the content. We'll keep it cool. Hi, Julie. Happy Friday, everyone, too. Yesterday was my birthday, Julie, so today I'm going to be celebrating. Actually, I'm celebrating all weekend. Okay, so more examples of rules changes. So the Chinese... And this is a lot of governments now, not just the Chinese, but initially when we were supposed to do this Welcome to Dystopia episode at the August 20th, Chinese now have a plunge protection team, and so they went into their stock markets and they tried to manipulate their stock market higher, and for a very short period of time they were successful. But they're gonna they didn't move their Chinese stock market above their 50-day and 200-day moving averages, so it's still in a bear market, but there was an attempt to. And so this just proves my point that these governments, they don't want asset prices low, they're panicking. And so the governments and the central banks are willing to intervene in markets, whether that's currency rate exchange or plunge protection teams, different ones to manipulate stock markets. So it's not just the US with all the different plunge protection teams doing this. And the other story that I wanted to talk about, and this one was from June 18th on Zero Hedge, and there was actually a leak that was brought to Bloomberg, and it was a leak from the Brazilian central bank, and its Brazilian central banker makes striking admission: foreign exchange interventions are unsustainable. So this talks about from June, and there was another story in the last couple weeks or month echoing the same thing about this with Brazil central bank intervention, was that Brazil has gotten desperate for these synthetic currency swaps where they're trying to prop up their currency before their October elections. And Stanley Druckenmiller, if you listen to that interview, he thinks that there's going to be tremendous currency problems. He has big bets on against the South African rand and the Brazilian real. So he thinks those two emerging markets are in the most near-term trouble. He has big bets on those, but we'll see. But my point, though, is that, it's not just the U.S. government that's doing these market manipulations. The Federal Reserve, the plunge protection team, whatever group is in the Treasury Department, pick your plunge protection team group. It's all these governments are trying to change the rules and manipulate markets because they don't want free markets. They don't want outcomes. They want the situation where they can go in and manipulate a market, and then if it doesn't work, they can go and blame capitalism. And most of the people are brainwashed. Look at what the polls are saying in the United States. And it's even worse in Europe. The polls in the United States are saying, especially my generation or younger, that more people favor socialism to capitalism. And yet there was another poll that just came out that I think Vice News or Vice Finance came out with the story. I saw it on my Twitter in the last day or two. And they said that people can't even, they asked people who said they favor socialism, and they can't even give a proper definition for what socialism is. So they're just in favor of socialism, even though socialism has failed in every single reality. Every single time that socialism has been tried, it's totally failed. Look at Brazil. I mean, there's countless examples. And then you'll hear the people who view socialism as a religion that, it wasn't real socialism, it wasn't tried properly, they'll blame it on someone or something else. That's just how things are, because they always are apologizing and blaming something else. Yeah, so that speech is really important. A lot of people in the alternative media didn't cover it. And basically, this outlines the process, if you go and read the speech, of how they're going to keep changing the rules and how there's going to be more and more interventions. There will be more currency swaps. The speech that this guy, Simon M. Potter, gave, he talks about how they do all these currency swaps. And the currency swaps initially, decades ago, for the initial banking crises and emerging market crises, they were not massive. So back during the tequila crisis or the Asian tiger crisis, the long-term capital management stuff, they were not, tens of trillions of dollars, that type of scale yet. But because we have a global credit Ponzi scheme and credit has grown so much that, now at this point, because we haven't had a market clearing event, we haven't allowed bankruptcies, we have all these zombie corporations out there. Oh, the zombie corporations are something I wanted to talk about as well. Okay, so there's an interesting article here about the Bank of International Settlements releasing a report on zombie corporations, and that Goldman Sachs is warning of a default wave as 1.3 trillion in debt is set to mature, and it needs to be refinanced over the next 5 years. And the bad thing is, a lot of these companies that need to roll over their debt and refinance, they don't have good collateral anymore. They don't have right amount of assets, they don't have growth in cash flow, and yet their debt has exploded. So normally, if you look at publicly traded companies, although some of these companies might not be publicly traded companies, normally bankers are willing to give a company more debt if they have a good debt to equity ratio or a good debt to cash flow ratio. And when those ratios get screwed up, that's when things get really, really bad. So if you're looking as not financial advice, but if you're looking to do research on a company and you see that the management team is using debt, you have to see that they're properly using debt and that they're, what's the right word? That they are strategically using debt to either add more cash flow, or they're making a smart acquisition. They're buying assets for pennies on the dollar, and they're not gambling the whole company on an acquisition with the debt. Vilius Kirlevis, socialism was never tried. If it was, everyone in the world would be poor or dead. Is that a joke, or are you actually serious? Well, so I see a smile, so I guess that's kind of a joke. Because, I mean, look, man, what Chairman Mao did and all the people who died, and, you know, Lenin and Stalin. So, I mean, there was versions of socialism in so many different countries. Over 100 million. At one point, there was a lot more governments implementing socialism than even, you know, the U.S.'s version of capitalism. That was decades ago. Stefan Monu actually had a great presentation on this with McCarthyism that he was talking about. So I think that's, if you have a spare 3 hours, I would check that out. That really opened up my eyes. I did not know how many Soviet spies and operatives were actually in the American government before even like World War II. That was crazy. Okay, so let me check my notes again. Oh, I wanted to talk about examples of rules changes. So, we have bankruptcy laws. The U.S. is considered to have some of the best bankruptcy laws in the entire world because people can get a fresh start, except for student loan debts. Student loan debts have to be changed. But the U.S., for a lot of other things, has really good bankruptcy laws to where people can, you know, get a fresh start, unlike in other countries. But President Obama, he spat in the face of bankruptcy laws, and the bondholders, the senior secured creditors of General Motors, who were supposed to basically take over the company when General Motors failed, the Obama administration, like, basically totally destroyed over 100 years of sound bankruptcy laws for business. And so the unions and others were allowed to jump in front. So those are rules changes. That's cronyism. That's not free market capitalism. That's corruption right there. That's not free market capitalism, what Obama did. And so that's a dangerous precedent, because whichever political, even, I mean, look at Trump. If there's companies that go bankrupt in the next financial crisis, maybe it's the military industrial complex because they've over leveraged their balance sheets, and maybe we move out of one of those countries for wars. And they had to be bailed out, I think, in the 70s. Jim Rogers made 10,000% returns buying some of those military industrial complex companies out of bankruptcy. He was laughed at. Like, people on Wall Street, when he told them that trade and he figured they would be bailed out, people were laughing at him, and he made some of the best returns of his career. I think in 10 years he made 10,000% returns just on some of his defense stocks. So, you know, my point is that the rules, the politicians in power, just because the bankruptcy laws say one thing, or the banks are not supposed to do this. I mean, look at what Victor Sperandio told us in that interview in his great article that he wrote a couple months ago. The banks basically can go in if they want to. I'm not sure if they're going to be doing this every day or every week or every month, but the banks can go in literally into the U.S. Treasury market if they want to and buy as many U.S. Treasuries as they want, and as long as they have the Treasuries in the right account, they don't even have to mark their losses down. Plus, those Treasuries, they don't have to mark their losses down on their Treasury investments. Plus, if you understand the banking system, they can leverage that. They can take the Treasuries and use those as collateral and use those for a bunch of other loans to whatever they want to loan to, whatever businesses or leverage buyouts or whatever. They can use those for other collateral for investments. They can use that as collateral for speculation or collateral on bets, things like over-the-counter derivatives. And, you know, when we're recording the show, today's Friday, October 5th, 2018, you know, the last week or so, we've had some very interesting things on the 10-year Treasury. Initially, the 10-year Treasury, I think about 2 weeks ago, it started to spike, and then it got swatted back down, and now when we're recording this, it's at 3.22%. It's almost at those levels that Bond King Jeff Gundlach, who's considered one of the best bond experts, in his opinion, he says if the 10-year Treasury yield closes above 3.25% for a number of days in a row, he thinks that signals that the bond bear market will have started and that there will be a run on bonds. But that kind of goes against the short squeeze that we've had for a while now in the bond market, there was a lot of short positions in bonds. There was a lot of people who were bullish on bonds. So it's very interesting what's happening. And yet, we have the dollar index is over 95 again. So the gold bulls, the perma gold bulls, who have been saying that the dollar rally is over, again, I see no evidence that the dollar rally has ended. The dollar index right now is at 95.6. The VIX is back up again. The VIX had gone flat again down to 12 for a while. The VIX is almost up to 15. It's at 14.82. So we have a lot more volatility. The bond market is starting to cause cracks, though. And if you go and look at the Federal Reserve's balance sheet, the Federal Reserve it's below 4.2 trillion now. So the Federal Reserve has sold over $300 billion in assets, and I'm using air quotes because we don't know exactly what they bought. I mean, they told us what they bought, but, there's no independent financial audits of what the Fed actually did buy and what's not on their, what they're not counting on their balance sheet with the swaps. But yeah, I would watch the 10-year Treasury yield is something I would watch. The dollar index is something you have to watch, and the VIX. The VIX is not in any danger yet, but the cracks in the bond market, I think, are another reason besides the Trump trade war and some of the other things that people are talking about why the stock market is starting to have a little correction. I don't know if it's a crash yet, but it is having a correction. Yeah, Vilius, I figured that you were kind of kidding. Yeah, I'm worried about socialism too. I mean, the problem is this stuff is preached still in universities. These professors, people are paying, depending upon what major the kid gets in college, people are paying so the kid can go into student loan debt, here in the United States at least. Kid goes into student loan debt, picks out a bad major, and then he's brainwashed, he or she is. Well, actually, can't use he or she anymore. There's so many. Apparently, there's gender fluidity, but we're just going to stick to the two normal genders for now. And they're getting brainwashed that there's no problems with socialism, and some of them may not realize it until it's too late. And the more you're at the university level, your master's degree, PhD, the more likely you are to be completely and totally brainwashed. Plus, you have all that debt, and then a lot of people are not getting good jobs with that debt. Maybe if you're like an engineer or a computer programmer or something along those lines, you can get a good job. But a lot of people who are getting that type of debt are not getting good jobs. And then we have we still have enormous corruption here, where the banks can manipulate gold and silver, and then they only get Bank of Nova Scotia, but only got fined a little over $500,000. So they made hundreds of millions of dollars in profits manipulating a market, and they only got slapped on the wrist for a couple $100,000 in fines. So this doesn't send the proper signal to the banks that they shouldn't manipulate the market. This sends a signal to the banks that, hey, we can get away with it. Happy birthday, George. Okay, let me check my notes. Let me make sure we're staying on track here. I have about an hour before I have to get ready and go to my birthday dinner with a couple friends. I did invite more people, but unfortunately some friends are out of town, and unfortunately some people didn't even have the courtesy to respond to me and tell me no thank you. Yeah, so you're everyone, if you do have investments or trades, you're going to have to pay attention to the news, because the main number one point here is the governments and the central banks will change the rules. Whether you're living in an emerging market country or you're living in a developed country, these governments, if they have any ability to do so. And the thing with that Brazil trade, what they did with their synthetic currency swaps is, if you read that article, they have added tons of extra liabilities to Brazilian government, okay, just to try to prop up their currency. And it didn't even really work that much. So they put a ton of extra long-term liabilities on the Brazilian people, on the Brazilian taxpayer, on the government balance sheet, just to try to prop up their currency for October elections. And so this is not smart sound, rational, long-term thinking. This is, if governments were doing that, you would see more investments in infrastructure. Although with China, with central planning, you can do way too much infrastructure. But these governments, a lot of them are so myopic with Brazil and elsewhere in corruption that they don't care about the long term. They want to stay in power, and they're willing to stabilize things temporarily, even if it means that the long term ramifications are more than anyone should be willing to bear. And basically, from what we've seen now with these stories out of China and Brazil, is that all these governments are copying the United States now with plunge protection teams. So I think it's safe to assume that a lot of these different governments have plunge protection teams now. So if they didn't already during the 2008 financial crisis, they have it now. And China's bond market is starting to crack too. So that's another one of these economic landmines. So you could start to see capital return, some of these Chinese sovereign wealth funds or people who have stolen money out of China. Maybe they're going to start bringing some money back to China because we're starting to see big cracks in the Chinese bond market. That was a story from a couple days ago on October 1st. That there's massive problems in China's bond market. So that could bring some capital that was flight capital. Some of these sovereign wealth funds could start to bring money back out of necessity. They have to prop things up. Vilius, yes, I know you're kidding. You're worried about global socialism that seems to be in the future. Yeah, I mean, it's basically it's on its path right now in the United States to creating an ideological civil war. Okay? Because even when the Democrats and the socialists lose something, look at the Kavanaugh hearings, man. I don't know if what sources you read, but it's coming out now that like the wives, the children, the grandchildren of these senators in the Kavanaugh hearing, that they were threatened. There was death threats, there was assaults, there was nonstop phone calls. I mean, this type of crazy radicalism and activism is very, very dangerous. So, in the United States in the past, there used to be a lot more polite free speech and discussion and debate without violence. But things are escalating rapidly. So I hope with this Kavanaugh instance that the Democrats will learn a lesson, because it looks like it backfired on them, that a lot of normal, rational, logical Americans said, you know what, this is enough. They have to stop this stuff. The stuff that they're doing to the people involved, whether it's Kavanaugh's family or any of the senators that were even thinking of confirming Kavanaugh, was just totally unprofessional. I mean, it was just inhuman, some of the stuff that they were pulling. And I really hope that this is not the new normal, that any time a Republican, whether it's a Supreme Court justice as a Republican or a Republican for any other key position, is not, just attacked like this. But I think it's going to be the new normal. I think the mainstream media and a lot of these Democrat activists that are funded by George Soros are willing to do whatever it takes. I mean, they're willing to. There was the guy from Think Progress. He put on his Twitter that we need to, anyone who interferes with our democracy we need to go to where they eat, go to where they sleep, and get in their face and never let up. And that type of attitude is dangerous. Did you guys read the op-ed? If you have not had the chance to do so, if you really want to understand how bad things are escalating here in the United States, go read the op-ed that Senator Rand Paul's wife wrote in CNN this week. And she details how, if you're not familiar, Rand Paul was attacked by his neighbor. He was mowing his lawn, and the guy was a doctor, and he was triggered, and the guy tried to murder him. Okay, guy was almost successful. Rand Paul was very, very sick. He has pneumonia. He had multiple bruised ribs, I think almost a collapsed lung. And now Rand Paul's wife detailed, after Rand Paul's home address was doxxed, they have his phone numbers, he cannot move to another place, they'll just do it again. And they're doing the same thing with other Republicans now too, is that Rand Paul's wife now has to sleep with a loaded gun next to her bed, They've had to spend many thousands of dollars on security systems. Okay, not everyone has that extra money to go and spend thousands of dollars on security systems just to protect yourself so you're not killed for having a differing opinion, or attacked for having a different opinion. And I'm trying to remember the other third thing. Okay, it was the gun, the security system, and and they have to have cops patrol. So the cops have to come and check on them hourly. They have police cars drive by. And obviously it's not perfect security situation, but this is America. There used to be free speech. It's in our Constitution. This is crazy, guys, that we've gotten to this level where, just because someone disagrees with you, you're a rapist, you're a murderer, you're a sexist, all these labels, all these hurtful labels that people are being called. I've heard Ben Shapiro, who's pretty generic conservative, they're labeling him a Nazi and a white supremacist. He was at a rally, a speaking event, I think at the University of Southern California campus a couple days ago, and there was people chanting that he was the guy's like I think he's a Hasidic Jew. He wears a yarmulke all the time, and there was people out there chanting that he's a white supremacist and a Nazi. I mean, I really shouldn't be laughing at it, but I mean, I'd rather laugh about it than cry at this point. This is how crazy everything is getting, and I think things are going to escalate further. I hope I'm wrong about this, but that just looks like the way things are going. But yeah, things are upside down. So back to financial stories. Last week on September 28th, there was an article about the upside down bond market, and junk bonds are set for a record winning streak as high grade suffers worst year since 2008. So basically, because of all the manipulation and craziness in the bond market, you have junk bonds outperforming safer bonds. Okay? And this is the longest. Junk bonds are set to make a positive return for the third consecutive year, the longest winning streak since records began in 1997. And junk bonds have returned, which are rated CCC or lower, are generating respectable absolute returns of 5.8% year to date. And so they've outperformed higher quality debt. So this is an upside down market right now. And we've had an absolute explosion in either junk debt or near junk debt. I think triple B. I'd have to look that up, the exact grades. I think it's triple B. And so that amount of debt since 2008, the near junk bond debt issuances, I think it's triple B or lower. It's somewhere in the tranche there. It's because triple C is junk debt. It's triple B, I'm pretty sure. And that amount of issued near junk debt has exploded to over $4 trillion. And so those are zombie companies that probably shouldn't have gotten the debt, but they have because people wanted the returns because central banks and governments were doing financial repression and manipulating interest rates lower. So you had these pension funds and these other, sovereign wealth funds and even regular retail people who are desperate for income, and they're willing to gamble on this higher risk, higher yield junk debt or near junk debt. And, it hasn't blown up yet, or at least most of it hasn't blown up yet. But if the Federal Reserve keeps raising rates, and we had another rate hike in the last week or two, that eventually that'll blow something up. So if you made me give an educated guess, it's looking like towards mid to late 2019. Because if the Federal Reserve, if Jerome J. Powell and the other people at the Fed stick to this rate hike increase, eventually something will break. Everything, the global economy, corporations, people holding asset prices are just too leveraged. So if they keep jacking rates, something's going to happen. And in the short term, that can mean the dollar increases. But as you guys know, and I've tried to stress this, if the dollar gets too strong, that's going to collapse like emerging markets. More than they already are. More than they already are. Okay, I'm checking my notes again. Since I brought up junk bonds, and this is how the government can change the rules and screw you over. I'm not sure if you guys are familiar with what happened to Michael Milken, but the government wanted to, he was the creator of the junk bonds I forgot the firm he worked at, Drexel Burnham, I think. And so he created junk bonds, and the government hated him for it. And so they basically threatened to put his own brother in jail. And he took a deal, even though he wasn't guilty. He fell on his sword to go to jail to protect his brother. So The government is willing to, whether it's the U.S. government or other governments, the government is willing to get you one way or another. This is why the U.S. federal government has almost a 99% conviction rate, although a lot of those include in the conviction rate or plea deals people take. But that's because a lot of people don't have the money to hire lawyers to spend tons of money fighting legal bills, so they figure, you know what, I'm going to go bankrupt, I have to take this plea deal. This is why the government's conviction rate in courts in the United States is so high. And so the government changed the rules on Michael Milken. I don't think he committed a crime. At least the couple stories and some of the partial books I've read about it, and other people like Dr. Mark Faber, who I think was working at that firm at the time, they seem to think he didn't commit a crime. But, leverage was applied on him, and his brother was threatened, and, the guy didn't want his brother going to jail. They were going to bring charges on his brother, so he took a deal that he didn't commit. He took a deal that he admitted to some type of crime, even though he didn't commit a crime. And yet you have guys like Elon Musk who are committing securities fraud, and they get a slap on the wrist. So, the government can change the rules, and the new normal sucks. If you have the right amount of money in the United States or the right political connections now, you can get away with almost anything. Maybe in the past that wasn't true as much, but now it's really true. Hopefully, rule of law will be reestablished soon. I'm not that optimistic, though. And I do have problems with Kavanaugh getting confirmation, because Kavanaugh is not pro-Fourth Amendment for search and seizure. The stuff he did with the Patriot Act when he was a young lawyer, go and watch Judge Andrew Napolitano talk about that. It's bad. So we need to hold his feet to the fire. We need to hold him accountable for that stuff when it comes up. Tesla. I'm not going to spend that much time talking about Tesla, but Christopher Irons at Quote the Raven podcast is really great about that. His updates are phenomenal, and he delivers it with a good amount of sarcasm. Although if you like cussing, then you're going to have a problem with it. People complain here when I cuss now. So if you don't like cussing at all in foul language, he's a guy from Philly, so that's kind of like his MO. But he delivers a lot of great information on Tesla. Although it's not a Tesla podcast per se, but that's a lot of the crazy stuff going on right now is with Tesla. Meanwhile, Elon Musk, after he has a settlement with the SEC, he's calling them out still. I think the major problems with Elon Musk is calling out the shorts as the worst problems with Tesla. No, the main problems with Tesla are Elon Musk. He's made promises that he cannot deliver on. He's done that for years. And now even after SEC settlement, he's still calling the SEC out. It's like he's trying to get the SEC to remove him from the company. I don't know if that's true or not. I've heard that theory floating around. Maybe it is true. Yes, the near junk bond issuances, lowest investment grades are triple B, and there's over $4 trillion outstanding now, and it's still growing. And China's credit bubble is still growing. And that's despite the Federal Reserve hiking rates. So something at some point, probably sometime to mid to late next year, something will break. Don't know what, but there's a lot of suspects. There's dozens and dozens of these economic landmines out there. And a lot of them are built on bad credit and, leverage. Because the global economy essentially is a global credit Ponzi now. Oh, another story I wanted to bring up. So, I have a lot of my audience who loves cryptocurrency. Well, New Zealand recently is now trying to issue anyone who comes into New Zealand through the airports, if you do not turn over your passwords to your smartphone and other electronic devices, you face a $5,000 fine. And they want to go after they want to see your financial records, your banking records, and they want to check to see if you have crypto on your electronics devices, and you're trying to smuggle them into New Zealand untaxed. That is crazy, guys. Remember, I said that governments would try to go after Bitcoin and other cryptocurrencies, and they were either going to try to take the blockchain and track and tax every transaction, or maybe you're going to see more governments copy what New Zealand just announced. So New Zealand is threatening anyone who comes into their country now and is not willing to hand over their password to their smartphone or their iPad or their laptop or any other electronic device. If you're not willing to hand over your password so they can scan for financial documents and other banking apps and stuff on your phone, they're going to try to attempt to fine you $5,000. So that basically means if you have a lot of crypto and you're trying to get it out of one country, you should not be going to New Zealand. Because if you have it on a thumb drive, you could have just memorized your crypto key, but if you have it on a thumb drive there, they could confiscate it now. Scary stuff. And this goes back to rule number 1, right? The governments and central banks can and will change the rules. So this is why, and you'll see this in the other rules 2 and 3, that you should not go all in on. This is not financial advice. This is just my opinion. But based on all the experts I've interviewed and all the articles and books I've read, and seeing how through financial history, how governments have changed the rules when there's a financial crisis to protect themselves and their cronies, that you cannot go all in on any one thing. You cannot go all in on Bitcoin and cryptocurrency. You cannot go all in on stocks. You cannot go all in on real estate. And you cannot go all in on just physical gold and silver stored in only one country. And then also you cannot go all in on just mining stocks or anything like that. So if you don't have the means to be at least somewhat diversified, it's going to be a very difficult go of it for you. I mean, it's going to be difficult for everyone except for the people at the top. There's going to be pain coming. We're seeing evidence of more inflation. But, the new normal sucks. The new normal sucks. I wish it was better. I wish I could give you guys better news. I wish I could tell you that there was unicorns and rainbows. But, I just don't see that. It's more Orwellian, unfortunately. But we are trying to wake people up, right? So at least we're trying to get people the information so they're prepared, and we are trying to wake some people up. And the more people who are who are woken up, then perhaps sometime in the future things will get better. But as long as socialism is being taught in schools and mainstream media is anti-capitalism, anti-profit, then, in the short term, things are probably going to get worse. There's going to be anyone who made money and worked hard, built a business from scratch, built it up, there's contempt for now. He didn't earn it. Okay, check my notes, and then I'm going to get to listener Q&A. We're about 42 minutes, so I got a little bit of time for Q&A before I got to get out of here. Yeah, so the more you study financial history, whether that's reading Murray Rothbard, Thomas Woods, Niall Ferguson, some of the other great financial historians, and you don't hear a lot of people on Wall Street talk about this publicly. You're not going to hear Jim Cramer talk about it. You're not going to hear the talking heads on CNBC and Bloomberg talk about it. You're not even going to hear a lot of people in the gold community or crypto community or alternative media talk about it because they haven't studied it, or they know it and they don't want to talk about it because it doesn't fit their narrative that they're trying to sell you. Oh, your problems are solved if you only have gold and silver. Oh, your problems are solved if you only have stocks. Oh, your problems are solved if you only have real estate. Oh, your problems are solved if you only have, this one or two asset classes. Then you're fine. Or crypto. But that's just not how history has worked. Okay? Normally, the worse a crisis is, the more the people in power want to change the rules and screw more people over. And normally, Wall Street and throughout U.S. history at least, Wall Street and the federal government win. The rules change. The rules benefit them. How many bankers went to jail for obvious fraud and the other problems that were committed during 2008? None of the major banking executives went to jail. Angelo Muzzillo, who was selling like ninja loans and other stuff at Countrywide, I think he got fined a lot. He didn't go to jail either. None of the people at the top that caused the most problems went to jail. They all stayed rich. Maybe they had big fines and they had millions of dollars in legal bills and they're sued a lot. Elon Musk is going to get sued a lot. Elon Musk is going to be dealing with dozens and dozens of he's probably going to be dealing with hundreds of lawsuits as long as he's still at Tesla. The amount of lawsuits Elon Musk is going to have as long as he's at Tesla are going to be insane. Because all the stuff he's saying, his behavior. And eventually, from what I'm hearing, a lot of the pension funds that are holding Tesla stock, they're getting fed up. They're starting to dump the stock too. So he can't blame the shorts, because a lot of people that are long Tesla, the regular level-headed money managers and Wall Street types, they're starting to question, like, why is he bringing up the short seller stuff? He just settled with the SEC. Why is he calling the SEC the short sellers enrichment? I forgot the third letter in the acronym. Why is he doing this stuff? Thank you for the donations. I appreciate it. It's beer money. Beer money for this weekend for my birthday. Nice. Okay, so we're done with all the stuff on the notes, and I'll get to listener questions and answers really quick. Again, stupid disclaimer. Everything I say here is my opinion only, not financial advice. It's for informational and educational purposes only. If you take all of your savings and you go and gamble it on pot stocks or crypto or junior mining stocks, not my fault. Okay? Look in the mirror. Look in the mirror. I know it's painful, but look in the mirror. Okay, reading through questions now. Hypothetical question from Joseph Johansson. Hopefully I got your last name right. For the metals part of a portfolio, I'm curious what percentage would you personally choose between gold and silver? Thanks in advance. Well, everyone is different. So if you're more aggressive, well, first of all, anyone who has had more than 10% gold and silver exposure total, whether that's metal or mining stocks, since 2011 has gotten absolutely killed. They've drastically underperformed. Now, putting things in perspective, and I think David McElvaney on the McElvaney weekly commentary this week did an excellent job of this. If you bought gold, 20 years ago in the late 90s, early 2000s, you've still drastically outperformed stocks on a relative purchasing power. So if you bought 100 ounces of gold back then, you've outperformed stocks by a lot still. So it depends. How long ago did you buy your gold and silver? Okay? But it really depends on everyone and your risk tolerance. Again, not financial advice. I have more physical silver than physical gold, but I'm more conservative with my exposure to gold and silver companies now. So as I've disclosed recently, I've sold a lot of my mining stocks, and my largest holding by far is Sandstorm Gold, and that's because Sandstorm Gold and Wheaton Precious Metals, which I also own shares of, those companies will actually, the longer gold and silver prices are held down, and gold price is a little above 1,200 today, and silver price was, last time I checked, was a little above 14. But the longer gold and silver prices do not rise, the more deals for cash flow, and in the case of Sandstorm Gold, the more royalties they will buy on juniors, and eventually the market will turn. So Sandstorm Gold has a good balance sheet and good cash flow coming in, and they can wait for those deals that they've done with the juniors. And when the cycle turns, some of those juniors that they bought a royalty on for cheap for only a couple $100,000 or $1 million or $2 million or something, although recently Sandstorm's been buying royalties on large land packages from juniors for only $2 to $10 each. Insanely cheap. Eventually, some of those royalties may pay off big, like lottery tickets. The optionality Sandstorm Gold has, along with their cash flow, their revenue growth, and their good balance sheet, that the optionality from some of those royalties, it could go from being worth a couple $100,000 to worth over $10 million each. So it really depends on what you want to do. But if you own a lot of physical metal and you only store, if you're an American and you own a lot of physical metal, the U.S. government could put a windfall profits tax. There's a physical metal. There is no tax advantage to buying physical metal in the United States now. You do not get long-term capital gains tax. Daniel Amerman, if you've heard of him, he covered this extensively in a series for free articles. I'm not sure what type of work he's still putting out, but about 5 or 6 years ago, he was putting out some really great stuff. And so he did articles like talking about all the tax consequences of like $5,000 gold, $10,000 gold, $100 silver, and showing that basically the U.S. government has already put the tax laws in place to where if gold and silver prices go through the roof, that if you go and try to sell the metal and you don't like use it as collateral for a loan or try to borrow against it or barter with it or something, that basically almost all the gains from your metal will be taxed away. But yeah, I mean, it really depends. I can't fully answer it, Joseph, because I don't know you that well. So you can maybe email me and we can talk a little bit about it. in an email. We can talk a little bit about it more, but it depends. It depends. So if you need income, you can't rely on gold and silver. You can't rely on any of the mining stocks. You have even Pan American Silver, who is the lowest, that and Fresnillo are the two lowest cost primary silver producers. And Pan American Silver, on their most recent investors presentation, as you can see from my long video, they've even basically cut their dividend, and they're talking about a variable dividend depending upon the silver price. So it just depends if you need income, how much risk you want to take, how much gold and silver you want to have, how much exposure you want to gold and silver companies. I personally think, and some people are going to get angry with me about this, but I would much rather have about 200. I haven't looked at the Sandstorm Gold. Let me look at the Sandstorm Gold stock price right now. It's $3.84 when we're doing this live stream show. So I would rather, let me pull up my calculator real quick. So gold is, okay, so I would much rather have about 313 shares of Sandstorm Gold than 1 ounce of gold right now. Just me personally. Because you know why? Nolan Watson over the long term has a good track record. He already built a successful business, and he can take that cash flow that's coming in, and he's going to be smartly using that for either deals that are going to have immediate cash flow, or he's going to buy some amazing royalties. And he's already purchased some royalties that on some really good juniors. So I would, at this point in time, I would much rather have 313 shares of Sandstorm Gold than 1 ounce of gold. I know that's controversial and some of you won't like that comment, but if I'm going to hold metal for years, obviously you should have both, but if I'm picking one or the other, in a diversified portfolio, you should probably have some exposure to physical metal. For insurance and wealth preservation, not really an investment, but if I had to choose one or the other, I would rather have 313 shares of Sandstorm Gold and hold it for 5 years or 10 years than 1 ounce of gold. Because even if the gold price doesn't do very much, Sandstorm Gold will have revenue growth. Sandstorm Gold will have increase in free cash flow. They can control their margins. Sandstorm Gold in the next year or so may even have a tiny little dividend, and they're going to be able to continue to do smart long-term deals, whether that's for juniors with royalties that long-term may have some cash flow. Those are lottery tickets and optionality, and they have almost 200, over 100 of those, and also for near-term cash flow. And that's why the business model works. The business model works for royalty and streaming companies in all parts of the cycle. If gold and silver go crazy, Sandstorm, unlike the primary gold and silver miners, Sandstorm Gold's costs will not explode. So, a lot of these primary gold and silver miners, because they don't hedge their energy input costs, when gold and silver do go nuts, when we do have a turn in the cycle, and silver goes over 25, probably a lot higher years from now, and gold does go to 1,500 or higher, or over 2,000 in the next couple years, then a lot of those primary gold and silver miners, their costs will increase. So they will not maintain margins. I've tried to educate you guys about this. The industry really, really struggles to maintain margins. So when the gold price was at 1,900 and the silver price was in the high 40s, almost to 50, those primary gold and silver miners, a lot of them, their costs were, the funny thing is, if you go back and look at their financials, their input costs were actually rising faster than the metals prices, and their margins, some of them had good profits, but a lot of them did not have the profits that you'd expect when metals prices were that high. They were not minting money because their costs, they could not control their costs, and their costs were actually on a percentage basis rising faster than the metals prices were on a percentage basis. And that's the long-term problem with mining, and why mining is a bad business. Margin control, margin compression with mining it's very difficult to maintain margins or increase margins throughout the cycle. Okay, looking through more of your comments. Wendell Morse, waiting for the COMEX to change the rules again. Exactly. Well, here's the funny thing, Wendell. The COMEX was supposed to have plenty of silver there, and Jim Poplava, when he ordered 1 ton of physical silver to be delivered, they supposedly had plenty of that silver. And you know what? It still took him over 6 months to get delivery. And they asked him a bunch of questions, why he wanted delivery. So, you know, the COMEX, a lot of the stuff they put out is with the inventory and all the registered and all that stuff, the registered inventory, the verse, there's two different ones. I forget. One of them's registered and I forget what the other one's called. But, you know, a lot of that's fictional. And they've already been fined in the past by the CFTC. I mean, look at what the Bank of Nova Scotia, for their spoofing, manipulating gold and silver markets, and they barely got a slap on the wrist. I mean, the large banks barely got a slap on the wrist for manipulating LIBOR. And you won't hear that mentioned on the mainstream media. How many times on the mainstream financial media have you heard that the banks manipulated LIBOR? I'm not sure I've ever heard it. Because you know what? If someone brought it up, I'm not sure they'd ever be allowed back. Tomcat, the euro sucks. Bitcoin even looks... Yeah, the euro was designed to fail. So if you're in Europe, long term, I would not want to hold euros. There's a lot of problems there. A lot of the countries don't even want to be in the euro. I mean, Italy, I think, would love to go back to the lira and devalue. I'm not sure they're going to be allowed to do that, though. Thanks, Linda. Thanks for the happy belated birthday wishes. Yes, Rich, unfortunately, I do like beer. Yes, I do like beer. The skis. Brewskis. Oh my god, what the mainstream media and the hardcore feminists tried to do with all talking about Brett Kavanaugh in high school was so bad. I mean, so many of those hardcore Democrat politicians here in D.C. and people in the mainstream financial media, if we started looking at what people did in high school, I mean, it would be bad. Probably much worse than anything Kavanaugh did. But, you know, the funny thing is a lot of these mainstream media journalists, especially the ones that here in the D.C. press corps, I mean, a lot of them, like Jim Acosta and these other guys, are drunks. There's a lot of these guys routinely, immediately after they're off TV, I mean, they're I shouldn't drop the F-bomb here, but they're going to bars and they're getting hammered. I mean, some of them, like, go there all the time and routinely have affairs and cheat on their wives or husbands. D.C. is bad. It's immoral. It basically is the new Rome. So for these pretentious a-holes to be, like, trying to bring up, like, a guy who's lived his life pretty darn good for, you know, long track record in the public life and bring up high school, it's just ridiculous. I don't want to talk about the Kavanaugh stuff too much. It's giving me a headache. And I'm trying to have a happy birthday weekend. Although it's kind of hard to not at least be aware of it because of where I'm living right now. And how all the celebrities were here. Amy Schumer was here yesterday. Asking to be arrested and then claiming how she was police brutality. Same thing with supermodel Emily Ratajkowski. I think I screwed up her name. I mean, everything's like fake and staged now. It's ridiculous. Okay, I'm reading more comments, and then we're almost done with the show. We're at 57 minutes, so I'll take a look at some more of the shows here. I'll take a look at some more of the comments. We're going to a Japanese steakhouse. Japanese steakhouse and sushi bar. The Italian budget's a mess, Vilius. It came in a lot larger than expected. From what I've heard, if you go back on past interviews or live streams, I've discussed this a little bit. Christopher Whalen, who is one of the top American banking analysts, he was in Europe a couple months ago over the summer, and at one of the conferences there was a couple heads of European banks there, and also someone from the ECB, and they admitted that there's over a 35% non-performing loan rate in Italy. So not only is the Italian government drastically overspending, drastically indebted, and there's a bond market problem in Italy, there's also an Italian bank problem. And so, you know, with the currency swaps between the Fed and the European Central Bank, the American taxpayer has unknowingly been bailing out Europe and the European Central Bank for a while, basically since 2008. Those bailouts that came in, that we found out from the Ron Paul partial audit, Those things really never stopped, according to the sources that I've heard. I don't know the exact amounts. But if you made me guess, my educated guess is an additional 10 trillion at least since 2008. And that's on top of the massive European Central Bank balance sheet expansion. That's on top of the Swiss National Bank, which is Switzerland's central bank, becoming a technology hedge fund after they did the Euro peg and creating hundreds of billions of dollars out of thin air to go manage that and buy tech stocks. I mean, everything's turned into fiction and fraud and corruption. Hey, Kathy, I appreciate it. I don't have a lot of sugar now. So yesterday for my birthday, I had a Halo Top, which is the light ice cream. And I eat mostly a high-protein diet, low-carb, low refined sugar now with my health problems. So if you could make like a paleo cake that's high-protein and with stevia or something, that would be great. Jesse, isn't Amy Schumer Chuck Schumer's niece? Chuck Schumer is a scumbag. That guy is really dirty. I think he's even a pedo. I shouldn't say that out loud. I'm about 20 minutes outside of Washington, D.C. I'm not in Illinois. But if you're in town for a libertarian conference, shoot me an email. Like a Ron Paul Institute conference or one of those. Jesse, you think that Amy Schumer's Chuck Schumer's daughter? I thought she's his niece. So that's a lie that the family made? Yes, Pad. The markets at this point are pretty fiction. They're not pricing in anything long term. It's all short term oriented. Like, I literally saw an article yesterday. It was from, I downloaded investing.com app. Is that Investors Business Daily app on my smartphone? And it actually said, I can't believe I was reading this. I don't know what the guy's track record is who wrote this article and if they paid him to write the article or not. But they were promoting it on this app, which means that this big investing app sent it out to millions of people, his article. And it said on there that McDonald's is a growth stock. Okay? I was like, oh my God. McDonald's is definitely not a growth stock. They are growing earnings per share, but they are doing it with financial engineering. Okay? 5 to 7 years from now, McDonald's is probably going to be in the same position that General Electric is. Same thing with 3M. This is the new normal. They're using total 100% financial engineering. McDonald's is not a growth stock. They're growing earnings, and revenue actually for McDonald's goes down every year. So please tell me how that's a growth stock. They're growing earnings, but they're doing it with financial engineering. They've increased debt over the last couple of years. I think debt on their balance sheet, on McDonald's balance sheet, has increased over 100% in the last couple of years. And in the short term, this has moved the stock price higher. This has grown earnings per share. But if you look at the operations of the business is not doing well. Okay, revenue's falling, debt is growing. There is major problems at McDonald's. And so basically, McDonald's earnings is just like their food, or at least what their food used to be. I haven't eaten at McDonald's in a while, so I can't tell you if their food's good now. But it seems that they are trying to make burgers cooked to order. I just would question, the quality of the meat. So I would rather eat grass-fed beef or bison meat for a burger. And I would rather have that once a month. I don't even eat burgers and fries that much anymore. So when I do, I focus on quality over quantity. For my birthday lunch tomorrow with my dad and my brother, I may go to like one of those really nice grass-fed beef burger restaurants that has their own cattle ranch locally as a nice treat. Yeah, Amazon's kind of the case study that a lot of these technology companies think that they can get away with and are trying to copy, that they can build a business with revenue-only generation growth. But Dave Kranzler lays out how basically Amazon's a fraud, but no one cares. And there's no way Jeff Bezos is ever going to go to prison for it. Amazon is actually a very sophisticated fraud. Okay? None of the value investors like David Einhorn and Mark B. Spiegel, I've spoken with Mark about this in emails, and I even sent him Dave Krenzler's report, and they won't admit that it's a fraud, but it is. Pretty much like everything else in this world now. The corrupt bull market, global bull market, and corruption. Yeah, Kathy, I heard the same thing. I heard the same thing about Chuck Schumer. Yeah. Yeah, he claims it was, I think, consensual sex with one of his daughter's friends. Yeah, he's a sick fucker. I think Donald Trump, even, like, without going into specific detail, he brought up that he had seen Schumer and some of these other Democrats do some sick stuff at parties, and Trump had left after he had said hello. This is when Trump was still a businessman and not running for political office, and I think he was donating more money to the Democrats than the Republicans. So Trump has been digging up dirt on these guys for a while, and I think that's why, these Democrats now are moving on. They're claiming that the next way they're going to get Trump is over the next 5 to 6 months, they're going to get him on his tax returns. So they're trying to say that Trump and his dad were cheating, were tax cheats. They're saying that Trump was tax cheating when he's 3 years old. Oh my God. I can't believe I even had to read that. Buy 100 ounce silver. I'm not going to go into detail too much. Send me an email. And I could explain. It's actually very sophisticated. It's a revenue-only fraud scheme. Basically, he can't allow the stock price to fall, and he has to keep growing revenue. But there's more details to that, but that's the short version of the Amazon fraud scheme. So you can expect a lot more acquisitions to grow revenue, and he's willing to pay almost whatever price. And he's not going to allow the stock price to fall too much without trying to figure out new ways to manipulate it higher. And I used to see very weird, and when I was paying more attention to Amazon every day, years ago, when I was learning more about stocks and learning about the corruption after 2008 and the financial system and the problems, I used to see very weird trade behavior in Amazon, to where normally with a stock it looked like it was going to fall below support levels, and miraculously a ton of buyers in Amazon would just come in, and I was suspecting that there was it was kind of like the Federal Reserve with their Caribbean hedge funds for certain markets that they have with plunge protection teams, and that there was miraculous buyers that would always come in and prevent Amazon stock from falling below key support levels. Okay, guys, well, I see more questions coming in. A wild man? Nah, man, Herb, I'm not a wild man anymore. If you knew me in college, maybe you could say that. I did party a lot in college. I only went to about 40% of all my classes in college. And I graduated with 2 degrees and almost a little under a 3 GPA, 2.96. So I got by on how I was smart and my good memory. I partied a ton in college. It was a lot of fun. Probably too much fun. But yeah, I'm not a wild man anymore. So thanks everyone for listening to this live stream. Take it easy. I got to get out of here and get ready for my birthday dinner tonight. And everyone have a great weekend. And I'll speak to you guys soon. It looks like the microphone issue was resolved. It was just a cord, thank God. I thought it could have been a worse problem because this is just a USB microphone, so I don't have to install any drivers. It should work. I thought Windows 10 was somehow going to screw it up, but it was just a bad cord. Okay, guys, well, that's it for right now. Everyone have a good weekend. Bye.